All right, cool. Can you guys hear me? Just go ahead and confirm if you can, and then we'll go ahead and get started. For those who joined late, we haven't even started yet, but I will be uploading this video anyway, so everybody will have a chance to watch it. Just confirm that you can hear me, and then I'll go ahead and get started. Hmm. All right, cool. Everybody can hear me. Sweet. So let me break down exactly what we're about to go through, just so you guys are aware and see if you're interested in sticking around. I'm gonna go over the watch list that we created for this week. I'm gonna briefly go over the charts and give you guys a little bit more of a breakdown to why I chose those stocks and what's gonna happen if things don't go our way. I'm also gonna break down SPY, and I'm also going to break down a few of the stocks that you guys had suggestions for charts. So without further ado, let's go ahead and get started. I'm going to pull up the watch list, which is going to be right over here, and I'm going to go over it. So we have XSPA, PVAC, TGI, PK, MGM, BA, TUP, and so on and so forth. So let's go ahead and start with XSPA, which is probably one of the most popular stocks that I've seen lately. Actually, for the past couple months, it's been a really popular stock ever since the COVID-19 pandemic started. XSPA has an opportunity to become one of the top testers in John F. Kennedy Airport. So they have a big advantage, and traders are looking into them, and they're very interested in what they could do in terms of growth for the company. Also, another thing to point out about this stock is that it recently went through a reverse split, meaning that its share price went up because quantity went down. So let's go ahead and start to look at the chart for XSPA, which right over here, I'm going to point out a few things. I'm going to point out the history of XSPA before this gap up. So as you can see, the stock had a series of lower lows until around March, end of March, beginning of April. It started to slowly make higher highs. It would gap up and then slowly come back down. But notice on the way down, it would remain above the previous breakout point. So we have a breakout point that was right around this level, but you could see on the pullback, the stock never actually goes below that low, which is a great sign for traders because you don't want your stock to go below the breakout point, in which XSPA did an excellent job at staying above that breakout point over and over again. Even as you could see, as it moved up gradually, you see it breaks out, comes back down, but stays above that breakout point. Once again, we see it do the same thing. Here, we saw it pull back a little bit stronger than our liking, but one thing remained true, the stock stayed above the previous breakout point. So what I'm seeing here, I'm seeing potential in the stock as it bounced above the support of $4. I'm seeing potential that the stock is actually going to keep moving up here. One thing that's leading me to that is, one, I'm seeing the moving averages cross over. You see the 10 and the 20-day moving average right over here, the blue and the yellow line are crossing over to the top side, which typically acts as a bullish support for the stock on the way up. Being incredibly popular amongst day traders, landing more and more contracts, this stock is poised for growth, and I think this week might be a week where it moves up as fears of the coronavirus start to rise again. Therefore, I've chosen the stock to put on our watch list. So what's going to happen tomorrow is this stock will either follow one of the following scenarios. The stock will either consolidate between those two price points until it tries to break above 5.75. Now we are destined, or we are so far looking at a negative 300 point market at open according to the futures. But regardless, XSPA may be the outcast because it is involved in the coronavirus crisis, and it may just benefit off of any further damage that coronavirus does because it's in a field in which it actually benefits the other side. So, another scenario that can happen with this stock is it gaps up at open above 5.75. At that point, we have to switch our setup because our entry right now is indicated between 5.50 and 5.75. If the stock gaps up above 5.75 tomorrow at open, you don't want to chase it right away. You want the stock to come back down, and what it will likely do is it will retest the initial breakout point right around 5.75, giving you a perfect entry, and you can put a stop loss right below that 5.75 point and ride the stock up, likely to test the 6.50 price target. Now, remember, everything that we're talking about is not definitive. Anything can happen. The stock market has a mind of its own, so nobody really knows what's going to happen, but these are just the setups that we can create for the stock for potential of trading it. The next stock on our watch list is going to be PVAC. So this is an energy company. As things are starting to open again, energy companies really gained a lot of traction in the past month. However, it looks like they died down completely as fears started to rise again. As you can see, they were hit hard when it came to the sell-off. PVAC got hit one of the hardest. Let me go ahead and take a look at the history for PVAC. That way I can point out to you exactly what happened on the stock. So right around the crash, the stock started dropping in January, and it went as low as 80 cents back on March 18th. That was the bottom of the market. Ever since then, the stock has made these gradual, nice higher highs, and it kept riding up, gapping up, coming back down, retesting the support, gapping up, coming back down, retesting the support, until most recently in the beginning of June, as we started to open up the economy again, we saw the stock fly up. It doubled it doubled in price just in a matter of a few days, which honestly, I think I've said this a million times. You don't ever want to see a stock do this because this is a very unhealthy pattern. This looks like a major pump before a big drop, in which we saw happen perfectly in this case, and we saw it happen perfectly in Boeing, where the stock will make massive highs, but then all of a sudden it will break to the lower side. Don't be caught up on this side of the mountain, guys. You don't want to be riding the stock this high, especially as it moves into overbought levels, because it could really destroy your position overnight when the market decides to take profits and sell it off. You got to remember, everybody tries to take profit at one point, and when it becomes extremely overbought, then a lot of smart fundamental traders will start to take profit right around the high because they don't want to risk their position any longer. Keep it in mind that you will likely never catch the very top or the very bottom of a stock, so focus on the 80% in between. I rarely, in my positions personally, ever take profits at 100%. So if I was riding the stock on the way up, it very much likely I wouldn't have taken profits at 19. I would have probably taken profits right around this point where the stock started to become overbought. Yes, it would have hurt to see the stock move up a little bit higher, but at least I know that I secured profits and I can sleep better at night knowing that I secured profits on the stock, and I will move forward to the next one, or I will just keep watching the stock to see it for a pullback. And so let's see what the stock is doing currently on a more micro picture. So the stock, like I said, had recently made a massive breakout. Its most massive breakout came after it broke out of this resistance right around $10. You could see the stock had a major run up right around $10. So we automatically, once the stock becomes overbought, we would expect the stock to make a pullback to one of the supports. The strongest support being in this case was its most recent strong resistance. So the $10 mark is going to be the most strong support that you have. Therefore, the stock will likely pull back to the $10 point, in which we saw it do perfectly in this case, and it bounced back up, giving us a chance to broke out of that major resistance and used it for a support. You do not want to see the stock fall below that support, because once it falls below 10, then it fell below its strongest support in most recent times. Therefore, now we're going to start to look at the stock in a more bearish manner, and traders will change the sentiment on the stock. So keep a very close eye on any stock that you're trading this week, on those major support points that they had their initial most recent strong breakout, because I threw the watch list and you will see a pattern repeating over and over again. There are plenty of stocks that recently came down heavily on that 1800 point drop, and they bounced right off that major support. That doesn't put them in the green just yet, because the market is still very much shaky and investors are still very much worried about the outcome of the next week or so because of that fear of the second wave. So any stock that you're trading this week, make sure that you're keeping an eye on those major supports. And if you don't know what they are, just ask, and I'll be more than happy to provide you guys with that information. But you need to watch those major supports. But with that being said, let's go ahead and see what could happen with this stock tomorrow. I'm going to go ahead and see a little bit more of the micro picture. So the stock looks like it had most recent, let me go ahead and zoom in a little bit more. The stock looks like it had most recently came down, bounced off that support, and then it gapped up on Friday, which most stocks did, and we could see that it came down, had a round bottom, and now it's going back up to test the 12.80 resistance. So the stock will either gap up above 12.80 tomorrow, gap down below the 12.35 support, but you do not want it to go down past the support of 11.22 because that was the lowest point that it had made on Friday. So that's a pretty good support for you to trade this stock if it does gap below this price point tomorrow and consolidate. So anything can happen on that 300-point drop. I wouldn't jump into any positions even off the watch list right away. I would let stocks kind of develop. I would like to see what the sentiment looks like this week before I move forward with any trades personally myself. But that's just going to be PVAC. That covers the energy sector. So far I've placed something that has to do with the COVID sector at the top, XSPA, something with the energy sector. Now let's go ahead and go with the TGI. TGI. We're going to go ahead and pull this up. So with this one right over here, we're going to take a look at what's been happening in the stock recently. Same exact idea that we've seen with other stocks. The stock had a major drop when the market crashed. It's been consolidating since. You can see right over here, even though the stock dipped below these support lines, it still stayed above the 311 bottom that it had made on March 18th, and then it moved on its way up. It tested the resistance of $8, so that will become its most. I would say that there are two different major resistance points that it had broken out of in this case. It would have been the $9 point because that was the high it made. But I'm noticing that on its way up, it got rejected at 8 three times. You can see that happen right over here. So there's 3 times in which it got rejected off of the $8 point. So making that a pretty strong resistance in which the stock, yes, broke out of. Therefore, you should place your most strong support at that point in case you wanted to hold the stock any longer than the indicated stop loss. So the stock will either gap down tomorrow, same idea, you want it to stay above that major support, or it will likely consolidate to the side before testing the $12 point and trying to push for that $14 price target. The reason why that's the price target is because that's the most recent high that it made and got rejected off of. So the stock will likely move its way, if markets are healthy, to this trading range instead of this one at the bottom, and it will consolidate again. You would want to maybe take profits at 14, or maybe take a little bit of profits at 14 and see if it tests 14 successfully, moving to its next price target, which will be determined down the line. So that's as far as it goes for TGI. Now we're going to move over to PK and MGM. Both of those are in the same sector, MGM being a little bit more on the casino side. But same idea as PK, you guys can see a pattern going. The stock breaks out on its most recent run, makes it to incredible highs of 15, but it got rejected at 15 and it pulled back incredibly down to the $10 point at one point, which is its most recent strongest support. So you could see that the same things are happening over and over again, and these are things that we've talked about before. So there's nothing new here. Stocks tend to pull back to their most recent strong supports, and they use them as support before bouncing back up. So as the stock became overbought, as you could see on the RSI, it needed a healthy pullback, and this is the most healthy pullback it can get. Yes, there is some kind of correlation or coincidence that bad news and stocks pull back at the same time, right when they become overbought. That's a world that you can explore. You can go check out the world of Wall Street all you want. Yes, there is probably price fixation, but at the same time, that's not the game we play. As long as we understand that that's the game that they play, we will be successful, because at the end of the day, the stock market's more psychological than it is numbers. So understand the psychology behind bad news and how it's supposed to drive the market, just so it can give it healthy pullbacks and corrections. So that's where the stock I see had made a lot of price fluctuations, got rejected, tried to break above, but came back down, tried to break above, but came back down. So I would say the $10 point is going to be the strongest support here. PK down the line is likely going to be a pretty good investment unless they really take a hard hit during the next few weeks. If we close down again or anything like that, if we go through another quarantine, it's really going to affect the stock a lot, because this is, after all, a resorts stock, which they need people buying for them to survive. MGM, same idea as PK. You could see same exact pattern happening. Stock recently pulled back incredibly from its $24 highs, which it had a massive run. Same exact thing here we're seeing. The stock made a very vertical move, which you really don't want to see as a trader. Well, you do want to see it when you're in the stock, but you want to be careful. You want to take note that, hey, this stock is starting to move a little bit too vertically for my liking. What's going on here? And so right when you see the stock go above that 70-point mark on the RSI, start considering taking profits, guys, because anything that comes up must come back down. As you can see, the stock came back down heavily. If you're in this position, you went from $24 to $18 in one single day. And that's what happens when you're greedy and you're not taking profits on a constant basis. So that's MGM for you. Now Boeing. Boeing, honestly, it didn't come up on any of my scanners, but I was really intrigued by the bounce that it had at 165 above its most recent support. The strongest support that it had was at 160. There's a good lesson here that tells us that stocks they don't need to go all the way down to their strong support for them to have a healthy pullback. They sometimes will make it near that support and they bounce back. Now, pay attention to this very candle right over here, because this is a great sign that that a reversal may be coming, especially if the stock is starting to near the support. So a candle that looks like this, if it's not near a support or resistance, it just means that there could be a price change. But when you see a candle that looks like this near a very strong support, then there's likely 65 support, and it bounced up the very next day for it to close incredibly high at 189. So now we're likely going to see the stock consolidate between 180 and 192, but keep in mind that negative 300 points may very much impact Boeing, and it may drop it below that 180 point. In that case, you want to move your strong support down to 165 and let the stock consolidate. One more time, don't rush into any trades, guys. You don't want to see the market change sentiment on you real quick tomorrow. We're opening 300 points in the negative. Nobody really knows what's about to happen. I bet you not even professional investors and traders know what's going on with this market. It seems like every time it tries to go down, somebody somehow finds a way to push it back up. So I'm not blaming the feds. I'm not blaming anybody, but we want to just kind of feel out the market on a day-by-day basis and not plan too far ahead. But we always want to have an exit plan, two, some hedges for us to hedge our long positions, because if you are in many open calls on Apple or Boeing or whatever it is, you want to find something that you can go into to offset any losses that may occur. So that's Boeing. Now TUP. I like the stock personally because I feel like it moves fast and quick when it decides to move. As you could see, it did that right over here. So the stock had an incredible breakout after it broke past its $4 strong support or resistance, which is now a support. And it, again, has a massive vertical move in which personally, not a big fan of. But it did have this incredible vertical move in which it's pulled back since. So on this breakout, I wouldn't have chased the stock, but on this pullback, I'm seeing a great entry for us because the stock bounced perfectly off that $4 mark on its pullback, and now it's going to consolidate for it with a very tight trading range between 445 and $5. So expect the stock to move sideways between these two price points, and it will eventually test that $5 point for another breakout to meet its first indicated price target. Now, one thing to keep in mind is that the stock, what we want to see do is eventually make it back to 8, test 8 for a breakout. But that's going to be a really, really tough thing to do, especially for a stock that is not completely bullish in the first place. So don't expect incredible highs from the stock. You want to take it one step at a time, let it make a high, take profits, let it make it slow, maybe go back in, and so on and so forth. So INO and CODEX were also two COVID-19 plays. INO, as we all know, was one of the initial pro-founders of the stock because of the huge investment that they got from the Bill Gates Foundation. The Bill and Melinda Gates Foundation. And they had been incredible since, but they have been a little quiet lately. So that makes us wonder, why have they been so quiet? Because typically stocks like this will go quiet and then they'll fool traders into thinking that they're dead before they make their incredible breakout. So one thing that I'm noticing on INO is, and I pointed this out for you guys on the chart setup in the actual chat. If you're in the chat, if you're watching this and you're not in the chat, I'll be posting the link to join in the description. But I'm seeing this channel down pattern that the stock has been doing, and I'm really liking it because remember Boeing's big breakout that came last month came from a channel down pattern. Channel down patterns are typically bullish. All the stock needs to do is make it above this diagonal channel, and it will likely make a high over the 1350 resistance, come back down to test it as support before moving up and testing 1440 for another big breakout, in which could take it to $17 and even higher depending on how much volume the stock gets. So I'm really liking this stock, especially for this week as fears start to rise again for the coronavirus. So I've included it on our watch lists. Now, CODEX is one of those plays that could go either way. So you want to be careful when you're trading CODEX because the stock could either break up or it could break down, just depending on sentiment overall. But I'm seeing a really that it's likely that it's going to break up due to the coronavirus. So I'm seeing a double bottom that happened most recently. It's a small one, but it's still a pretty significant thing to take note of. So there's a double bottom right over here that the stock hit on its 2-hour candles, and it bounced up, and now the stock is consolidating between $14.90 and $16. So the stock will either gap up at open in the new trading range between 16 and 18, or it will stay consolidating between these two price points, giving you an entry where a stop loss should be just below the support, and you can ride the stock up for it to test 16 and eventually make it to the $18 price target. Now, if the stock has one of the bigger breakouts, it will likely push way past 18 and even make it to 20 and so on and so forth, but it will not shoot straight up. It's very likely that it won't shoot straight up, and it will likely make small higher highs and higher lows. You really, like I said, don't want a stock to shoot straight up because if the more vertical it goes, the more vertical it drops. And you could see a perfect example right over here as the stock went all the way up to $30 and then the very next day dropped back down to $16 or $17. So it's, it's just it's a common thing on the market that traps a lot of people. Stocks that go vertically up, people start to salivate. Traders want to be in them so bad, they jump in and then boom, they go away. I actually punched my hand, if you guys heard that, for further expression, I guess. But that's going to be CODEX. Now, I've included SQQQ, which is the inverse for QQQ, in our watch list only because I want to have protection in case things don't go our way. So if the stock market drops this week, I'm sorry to say, but this whole watch list will likely be thrown out, apart from maybe XSPA, and INO and CODEX, especially if those stocks drop below that significant support that I had been pointing out through the video. But I've included a few plays in here that could potentially go our way in case the stock market goes down, in which I personally I feel indifferent about the future move of the stock market at this point because it's been fooling a lot of people. So I don't want to give you guys the wrong sentiment, but I will go ahead take a look at the SPY chart with you guys. That way we can get an overview of what's happening in the S&P 500. So let's go ahead and take a look at SQQQ. First, I want to point out on the one-day candles, in which I pointed out to you guys on the watch list in the chat. If you're in the chat, I want to point out the fact that the stock got rejected heavily at the 20-day moving average, which you would likely say, well, I mean, if the stock got rejected, wouldn't that mean it's going bearish? Yeah, to a person, it may seem like it's getting bearish, but I am also seeing a pregnant Harami candle. Now, that may sound funny. What is a pregnant Harami candle? It's a candle that looks like this. So you have one green candle, or um, in this case, one green candle that gaps up, and it makes a pretty large move. And then next to it, there's a smaller candle that fits the body of the previous candle that's also green, which is an incredibly strong sign that we're about to see a bullish move. So a bullish move from SQQQ means a bearish move on triple Q, which that is the technology index. So it's one of the biggest technology index, at least, that holds Amazon, Apple, Microsoft, AMD, so very large cap stocks in the technology world. With that being said, this pregnant Harami could very much mean that the stock market is about to drop and SQQQ is about to go up. Now think about it this way, guys. For a stock that's $8.91, maybe it doesn't hurt for you to pick up a few shares and keep them in your back pocket while you're trading tech stocks in case things go against you. That way you have leverage over the market. Remember, all we're doing is we're playing a game, and you want to win the game every time. And so look at the different stocks that you can, put on your tool belt for you to avoid a big loss or to avoid losses at all. I've said this in the chat just the following week. don't just watch your portfolio go down. You need to do something about it. If things are moving against you, if you made a bad call on Netflix and you don't have day trades to spare for you to get out of that call, maybe buy puts on something that's going down during the day. That way you can offset your losses. Like I said, it's all a game. Another thing that I want to give advice on is don't look at your individual wins or your individual losses, or else you'll drive yourself crazy. If we're playing a game and we're using 10 stocks on our tool belt, wouldn't you say that the overall wins and losses matters most than your personal per stock win or loss? So I never looked twice when I close a position that was a loss, but I knew that I had another position that offset it as a win. All I do is I take a look at the overall and I'm happy with it because I know that I played the game right and I came out on the right side. So I hope that kind of makes sense to you guys. Just a piece of advice that I personally learned through the years. I used to hold grudges against those stocks that burn me, but that's only because I didn't use the tools that I was given for me to offset any losses and create wins for myself. So with that being said, um, let's go ahead and take a look at what SQQQ may do. So SQQQ made a high of 940 recently, and it got pushed back down as the stock market saw a little bit more of a green light on Friday, but it's still consolidating between $8.80 and $9.20. So you'll likely see the stock consolidate between these two price points, or it may gap up tomorrow at open due to the reason that we're already going to be dropping 300 points. So I hope everybody gets it by now. Because we're dropping 300 points, the inverse of the technology market, which is SQQQ in this case, will likely gap up 300, well, not 300 points, but it will gap up on that drop of the market itself. So you'll likely see SQQQ make it above 920 at open. You don't want to chase it right at open. You want to make sure that the market sentiment remains bearish before you jump into it, and you want to let the stock consolidate before testing the $9.40 mark for it to break out and make new highs. So keep this index and the triple Q index at the top of your list if you're trading technology. Also keep SPY S&P 500, which is incredibly important to keep a watch on while you're trading in the market. And so that pretty much sums it up for our watch list. What I'm going to do next is I'm going to go through the stocks that you guys requested. There's only a few of them, and I'm going to go through them fairly quickly. And first, I'm going to start with Tesla for Jillian. And if you are watching this video and you're not in the chat, like I said, I will be posting our link in the description for you to join. I'd love to have more people join us. That way you guys can do your own chart requests. But Jillian, you had asked for Tesla, which seems to be a very popular one for you these days. Let's see what Tesla has been doing. First of all, I want to take a look at the 1 year, 1 day candles. So on the 1 day candles, we're seeing that Tesla on Friday dropped very low below the 10-day moving average, but it got rescued and got pushed up to close above it. So that's a good sign right there that it's using that 10-day MA as a support line. With that being said, considering it used it as a support line, you want to keep an eye on it while you're trading the stock, because if the stock pushes under it again, there's a very good chance that it's going to get sold off very quickly, especially if it drops below that $900 support. So let's take a look at the more micro picture that the stock has. You can see that the stock had an incredible run over the initial breakout point of $950, but it failed to use it as a support on the way down. Now, $950 or 967 for Tesla, to be exact, was a very important resistance. Therefore, after it broke out of it, that point was a very major support line, because any resistance that's broken out of turns into a support automatically. And so you don't want to see the stock fall below a major support like that. And it explains why Tesla got sold off so quickly when it broke under it. You could see that the stock broke under 970 and it got pushed all the way down to 913 at one point, because that support was so important. So now it will have a very hard time making it back above that resistance, unfortunately for the stock. So the future of Tesla really matters around the $900 support or the 10-day moving average. You don't want to see the stock fall below um, those price points, because now it's going to go into more of a bearish move. And the most strong support you don't want it to go under is going to be at the $800 price point, which I very doubt that it will. Yeah, famous last words, guys. I mean, it may. Anything can happen at this point. I think we called it a kangaroo market. So $800 is a very strong support for the stock. If it goes below it and starts making lower lows, then I'm afraid we're going to look at it as a bear stock, and you guys will profit off those puts. But as far as right now, Tesla's sentiment is still above the 10-day moving average, so we're gonna say that it's gonna do fine. But if it drops below that moving average tomorrow and manages to close below it, then we're looking at a bearish next move. I hope that helps. And so that was Tesla. I have Jeffrey for AMC and Play. Let's go ahead and take a look at the AMC stock. Now, I know movie theaters are starting to open again. And so with that being said, that's exactly why AMC probably had this very large move that got shut down incredibly after their earnings. You could see that we had a pre-earnings run up. If you're not familiar with what that is, it simply means that the stock gets ran up to a very high price right before earnings. Typically means that the stock will crash on earnings because they're just kind of pumping it up before a bad earnings and trying to maximize profits. See a very strong red candle the very next day, and the stock managed to close below the 10 and the 20-day moving averages, but it got rescued on Friday's push to close above the 10-day moving average. So far, sentiment on the stock is incredibly confused. I don't really like what it's doing. It's not a chart that I could read. It's not a chart that I could trade. There's no real setup. Therefore, I'm going to leave it alone until we see further development from the stock. Next is Play, which I actually liked this chart the last time I looked at it. Let's see what's happened since. So you could see the same exact kind of thing happened to Play, except it fell below that major support that it had, which was right around the $16 price point. So Play had a major support. Let me go ahead and delete these because they're useless at this point. So Play's major support was right around $16, and you could see that it fell below it, but managed to push back above it. So the stock pushed down below that support, and now when a stock pushes below a support and you still want to hold on to it, make sure that you guys draw out your very next support because there's always supports unless it's making an all-time low. So the stock breaks below 16 and then it breaks below 15, which is another support, but it manages to find support right around the 1435, which was created right around here where the stock got rejected but gapped above. So this is the reason why it found support right over here, is because this was recently used as a resistance point that got broken out of, and you can see the stock had a major run, got pulled back to use that 1435 price point as a support, bounced up, and now it's using the $16 price point once again as a support. So the future of the stock is really dependent on if we close down again. I like what it's doing. I think it's a cool stock to get into. I think the chart looks promising. I wouldn't bank too much on it until we see the market sentiment, but I do expect the stock to keep pushing up if markets remain healthy this week. Next price target is going to be right around 18. After it breaks out of 18, that price point will become a support. Therefore, you should move your stop losses up, and then the next price point will be 20, and then we'll go ahead and develop it further as it goes on further. So that was Play. Now, Kevin, you requested Hertz. Let me take a look at this chart. To be honest with you, I haven't traded this stock at all. I know it's been a really popular one for everybody, but I stick away from the big hype stocks only because I'm not really a big fan of trading really volatile movement. I like more solid setups. But you could see that the stock recently broke out, very strongly, came back down to test the support right around the 185 price point where it bounced, and now it's using the trading range between 245 and 345. So you have support at 245. This isn't resistance. This is a support at 245, and the stock will likely consolidate between these two price points until it pushes further. Personally, I would stay away from the stock only because it's completely news driven. The company's in bankruptcy, so there is no upside in the future. If you get caught in the trade, really there's no recovery. If it loses the hype that it has right now, the stock will keep going down eventually for you to lose all your money. So if you are dying to trade this stock, then I've pointed out your support and resistance lines on the chart. You can use this as your stop loss point, and you can even use this as your stop loss point. Use the 345 resistance as your breakout point for a possible push to the $4 price point, and then we'll develop it further as it goes. Rohan, you wanted Alibaba. So let's take a look at Baba. Cool. So the stock looks like it's still within trading range. It didn't drop too hard on the most recent market drop. So good for them. I like the fact that they held their own. Although the stock, again, is a very good example of what a stock that moves vertically looks like. You can see the stock was only squeezing its way to go back down. The stock squeezed its way up for it to come back down. That's called a wedge. And then on the 1 hour candles, you can see that it had a bearish engulfing. So the red candle takes over the green candle, and the stock gaps down a lot on Thursday at least, and it recovers back above the 216 support on Friday. Thus far, the stock looks healthy. It's still between the 216 and 225 trading range. You can enter the stock anywhere between these two price points. The stock will likely move its way up to test the 225 unless we have unhealthy markets this week. Then you can use the 210 as your price target, maybe for shorting the stock or puts if it drops below the 216 price point. Tans, you asked for IBIO. Let's take a look at IBIO. So IBIO has moved a lot ever since this setup. So let's go ahead and take this setup off. And it moved up a pretty good amount towards the end of the day on Friday. If I'm not mistaken, I have shares in IBIO myself. I can't remember. But IBIO looks like it had a somewhat of a double bottom right over here, or maybe even a triple bottom right around the $1.40 price point. And it bounced off that $1.40 on Friday for it to close just below the resistance of $1.60. So there's your trading range right over here, right between $1.40 and $1.60. The stock will likely consolidate between these two price points unless it gaps up tomorrow. The stock could very much gap up tomorrow. With that being said, IBIO is a coronavirus candidate play because it is involved in that industry. Therefore, it could gap up tomorrow at open above $1.60. At that point, don't chase the stock. Wait for it to give you a trade setup because it will likely get rejected at $1.80 or even $1.70 before consolidating and moving up again. So don't rush your trades on this one. It still looks healthy. I like what it's doing. I think it can definitely move up, but I would like to see it move above $1.60 before going into it and consolidate a little bit longer before testing $1.80 for an eventual price point of $2, price target of $2. IZEA or IZEA for Thomas. So let's go ahead and take a look at IZEA. This is a tough one. Yeah, I would personally just stay away from the stock. This is a massive bearish engulfing. I could be wrong, but I'm not seeing much potential from the stock. We just talked about what a bearish engulfing is. You don't ever want to see a stock make a red candle like this because think about it this way: you may on the way up see a green candle like this, and you'll chase it on the way up. But when you see a red candle like this, wouldn't you just want to stay away? So don't chase it on the way down, guys. Just let the stock develop a little bit longer, and just kind of give it a second for it to show us a little bit more life before we go into it. So there's IZEA, VUZI for DJ, VUZI. Let's go ahead and take a look at what this one's doing. So this stock had incredibly failed us ever since our last setup. You could see that I think I had made the stock on our watch list. Maybe 2 weeks ago, but it had broken down below every support that we had for it. And now it really came down to the last and final support that it can before turning the stock off completely, which was at $2.10. So the stock, you can see, came down to the support of $2.10, and it bounced perfectly off of it. Therefore, this may be a good sign for the stock at this point because now the stock had become oversold and it bounced perfectly off that support. So if you want to go into the stock, you can go into it here, place your stop loss just below this price point, and let it ride up. The safest price target that you can set for the stock initially is going to be its very next resistance of $2.40. After that, your price target will be $2.60. So overall, the sentiment so far on this stock is about to turn bullish only because of that strong bounce that it had off the $2 price point. But keep in mind that this is a stock that will be affected by overall market sentiment due to the reason that they're not really involved in the coronavirus industry. But this stock is involved in smart technology, which smart glasses, in which a lot of doctors and hospitals are starting to use because they want to avoid touching their face or touching their phones while working. So maybe this one has potential to go back up from here. Like I said, if you're dying to trade the stock, let it bounce off the 210, use that as your support or stop loss, and you can ride it up for the first price target of 240. You can use every one of these resistance as your next price targets. So So that's as far as the charts that I had written down. I'm only gonna do two more because I do have to get going, but thank you guys for checking in. DFS for Amir, of course, I will do that for you. I almost looked up Amir. Let's see if that's an actual stock. Oh, no, it's not. So let's go ahead and take a look at DFS. So Discover Financial Services. So you can see that I've already laid something out for you guys right over here on this one. This is probably from a previous chart request that you had. So you can see that the stock had came down below the support of $52 most recently on the sell-off. The reason why it sold off is simply because it was affected by the overall market sell-off, and one and two, it was oversold. It was overbought. I'm sorry. So it's clearly overbought. Therefore, this isn't a stock that you want it to be in right around here. One thing to keep in mind is this very candle right over here, which 100% indicates that there's a reversal coming, especially when the stock is becoming overbought. So when you have those two things, these are the two signs that you need to look for if you're bullish on this stock. Hey, what is this candle? Why did this candle be created? The reason why is because there was a lot of selling pressure from the top, and the stock barely made any move on this candle as it became overbought. Therefore, this was a clear sign to get out of the stock. The stock came back down, the moving averages crossed to the lower side, and the stock fell below the moving average right around this price point. Anytime that a stock falls below the moving average, you want to use that moving average as your resistance line. In this case, you can see the stock tries to break above it, gets rejected, tries to break above it, gets rejected, and then finally the stock broke back above it and managed to close above the 20-day moving average on Friday on the 1 hour candles. But let's see what it's doing on the 1 day candles. On the 1 day candles, the stock is still very much under the 10-day moving average, but it managed to use the 10-day moving average, the 20-day moving average, which is more significant, as a support. So the stock bounced off of it perfectly and made it back above its resistance of $52. So now that the stock is above the $52 resistance, we can turn that resistance into a support for the stock to bounce off of. So the stock will likely bounce off that $52 support. But if we are going to be opening indeed 300 points to the negative tomorrow, then expect the stock to gap down, and then 52 will turn back into your resistance, and $47 will become your support, or even $50 will become your support, because that's another support that I'm seeing here. So as far as right now, sentiment on the stock is bullish, but considering we're opening 300 points in the negative tomorrow, if our sell-off continues, then this stock can very much go down lower to test the 47, eventually test 45, and eventually test 42.40, and then we'll develop it more as we get there. So one thing that I want to go over, and this is oh, okay. So Alex, you're telling me that the Dow is up 400 points in the futures. Let me go ahead and check futures on my phone real quick, because I'd be really interested to see if that's true. Oh no, we're down 359 points still. So I'm still seeing that we're down. So far we're down in the futures. So let's take a look at GUSH real quick. So the stock fell recently below the support of 43.65, and it's finding support right around the $40 price point. If you're in this stock, you don't want it to drop below $40. You simply don't, because as far as right now, the stock is still making higher highs since its most recent breakout around the $40 price point. If the stock falls below, there's a very good chance that the stock will continue to downtrend, because it will make the exact opposite move that it would on the way up. The stock will simply go down, go back up to test the resistance, and then come back down, and so on and so forth, making lower lows. So you want to keep a stop loss right below that $40 price point. You don't want the stock to go below it. Okay, so let me go ahead and go over SPY before I leave you guys, which is the S&P 500. So a massive reversal that we saw from S&P 500 recently. It broke below the support of 310, which was not really anticipated by anybody, but that 1800 point drop pushed it down incredibly. And so what's going to happen to S&P 500 from this point forward? As far as right now, if I was looking at this market without any knowledge of what's happening, I will tell you that this market is likely going to go down from here, only because the stock market is having a very hard time pushing back above that 10-day moving average. Another thing, this is another pregnant harami candle, in which on the 1 day candles, being such large time frames, is an incredibly important candle for the future of the stock. So this every candle on this chart represents 1 day of movement, and it created a bearish Harami candle, in which can very much break down further from here. And so tomorrow, the best thing to look at is going to be the 20-day moving average. If the stock market manages to stay below it and close below it, there's a very good chance we'll be pushed down further to our very next support, which is going to be the low of Friday, which is 298.48. So you can use the 298.48 price point as your next support for tomorrow, because if we gap down and we manage to break below that price point, then we want to look at the very next support, which is going to be right around 294 for the stock market, which it will drag down all the stocks with it. So this is why it's important to keep an eye on the S&P 500, because it will really give you an insight of what's happening in the overall market. I'm afraid to say this now because I may be wrong, but we may we may need to recreate the entire watch list this week as this week progresses, to more stocks that will be fitting a more bearish market, because it's not looking too good just based on this chart. I hate to be cynical. I usually don't carry sentiment forward. I will recommend that you, when the market opens tomorrow, look at it with an open mind. I know many people are quick to buy puts right at open, thinking that the market will continue to move down. But that may not be the case. Just because we're gapping down 300 points, it doesn't mean we're going to keep going down. I suggest that you guys just kind of feel it out for the first 10-15 minutes of the day, maybe the first hour of the day. Personally, I try to avoid going into any long day positions within the first 30 minutes unless I'm scalping within the first 30 minutes. Um, I really want you guys to focus on maybe not opening as many positions this week and trying to open more solid positions, because these are the weeks that will determine good traders from bad traders, from great traders. Great traders are, believe it or not, less is more on the market. The less trades you make, the more successful you're going to be. Because if you're taking too many trades, that means you guys are probably just throwing your shot in the dark and trying to see if it works. You don't want to do that. You want the market to kind of give you an opportunity. You don't want to just force opportunities. So I'm going to leave you guys at that. I hope that was helpful. Thank you for everybody for checking in. If you're from the Hyperstocks community, thank you for checking in. If you're not, we'd love to see you join. I'm going to post the link in the bio. I will be posting this video on YouTube for playback purposes. So if you guys are interested in watching it again, go ahead and use the link that I will be sharing. Thanks again for checking in, guys. Appreciate your time.